Welcome to Java. Thank you kindly for joining me again. It's October 20th, 2025, so it's Monday after a bit of a weekend where everything kind of sold off last Friday. So we've got some apparently cockroach credit going on. We're looking at some standoffs as far as tariffs and some geopolitical issues, and it is also CPI week. We hope we get some information for that. Won't be until Friday. So let's get started with what's going on in the markets. We've got the fear greed meter is at 27, so this is a bit of a recovery. Dropped all the way down to 22 last Friday as that sell-off occurred. So we're watching a bit of a recovery in the markets this morning. Looks like should open in the green. Now, if we look at Japan, the Nikkei, as well as Europe, both had a bit of stronger markets. We've got a little bit of things going on with France, we'll talk about in a moment. US 10-year yield back up above 4. We've also got relative strength of the dollar has increased again. So the US dollar trade is back on, showing a bit of strength. We've got cryptocurrencies up. So Bitcoin back above 110,000 level. It's at 111 at the moment and still showing more strength. So with all of this, we've got quite a few people that were calling for it to crash lower. Could still, but it's got a great amount of support right around that 110 level. So Japan, want to talk about them for a moment. They have the new prime minister and their 10-year yield is up to 1.67. Now, a lot of their money flowed into their stock market index, did really well this morning on the premise that this new prime minister that will likely be coming in will be very dovish, and there's going to be a lot of free money printing, free flowing, very easy policies going on. So, as I've said quite a few times before, you have to choose at a certain point in time once it's inflated. You either have to choose between your economy or your currency, and they're not likely to let their citizens suffer. So the currency will be crashing, is my overtake on that. So, as I said, with United States stock market, looks like we're going to open in the green. We've got the futures up as well. Now, we've got one outlier here, and it is crude oil. Very weak, below the 60 mark at $57, and it could go lower. So, this is in short on an oversupply concern. So, OPEC Plus coming out saying they're going to flood. This is all geopolitical moves in order to pressure Russia. So, taking a look at our daily driver, we've got the inflation, or you can also say debasement trade going on. So inflation is a weakening of the US dollar, the currency, and debasement just means that it's losing relative purchasing power. So they're really the same thing. We've also got major earnings coming in this week from a lot of the tech giants. So a little bit later this week, a lot more exciting things. Not as much today, other than today looks to be a recovery day because there was such a severe market reaction on Friday. Now, what has been happening is on Fridays, the big money selling off into the weekends over all of the uncertainty going on. So we've got the fear gauge is showing this in the VIX. It's really showing this instability in what is going on with the uncertainty of the market. So this is not a solid market that we've got. We've known this for some time. If you've been here for a while, if you're new, just stay with us and we'll explain why. So we've got JGBs, that is Japan bonds, and the stocks. These are, I believe, what is going on in the background. The new prime minister that is coming in is being set up for failure because there's not any winning course out of this. As I just said, you have to choose either the economy, your citizens, or the currency. So it looks like she will probably vote for the destruction of the currency. Just yesterday, we were talking about how their banks in Japan had agreed to bring in stable coins, and they're already working on some regulation for that. So they will be one of the first ones to go over to this uh, digital solution, if you will, for the people. Now, we are expecting CPI on Friday. That is going to be the key report coming out as far as data that the market is going to be looking at. And that is because that will guide, very likely, uh, the rate cuts going forward for the Fed. However, I think it's going to have less of an effect because the Fed has already cut. So they've kind of already shown that they're willing to do whatever it takes. Now, we talked about Brent and the oversupply. We had Brent's get downgraded again, this time by S&P, and this is because their debt is just massively out of control, as well as all of the political uncertainty. So, with everything that's been going on, they are getting credit downgrades as they are an increased risk for their bonds. So, they've got a bit of fluctuation. However, the interesting part is that the markets are not really moving on that. And what that means is back when this political uncertainty started, and it did affect the markets, they had already priced all of this in. So this is the previous one. Fitch was the first one. They hit them with a record low credit score. Now S&P following. Moody's is the final one. And if they do cut them enough, it will increase their yields that they have to have, and they will not be able to service their debt. So they will be looking at owing the IMF even more. So speaking of the IMF, they are pushing Kiev now to weaken their currency because they've gone to them looking for another loan. And IMF doesn't want anyone able to kind of pull their way out of it. They want them to weaken their currency so that with this inflation, it gives them more control. The more there is inflation, the higher the debt levels, the more control the central banks have. So just keep that in mind, because that is the whole premise in the background of what's going on. So the calendar this week, we've got a few things coming out. Leading economic indicators today, 10 a.m. Eastern Time. Then just Fed governors. Thursday, we start getting, it's really residential real estate reports that are going to guide that, as well as the CPI, core inflation. Now, a couple of things with the markets. There is the metals company, thanks to the Earl of Ix. Is it going to be the Aussies to the US rescue? And what this is all about the rare earths. Australia has a large amount of the rare earths, and they could be doing a deal. They're talking about this now. So this could affect those. We've got the rare earth stock tickers all moving higher, and Australia's stock market is going positive on this news. So they've gained on the trade tensions easing, as it says here. This is saying because it's a resilient Chinese economy. They do a large amount of trade with them, but it's really all about these metals. So we're watching a rotation also in the background to the Russell, small caps, and healthcare and utilities. So in the background, we're watching a quiet shift to safe haven assets, if you will, in the stock market. Not in a massive way, but a very quiet way. We also had something happen as gold and silver hitting all-time highs. India's largest silver refinery ran out of physical silver for the first time ever in history. So we're watching the physical squeeze is now beginning. And we've got this why millions of Americans are risking health and homes by living without insurance. They're coming up with all kinds of excuses. The short bit of the fact is that they cannot afford it. So with the rising housing, they call it shelter, inflation, as well as insurance and property taxes. So property taxes also playing a large part in this. Now, looking at what has been bolstering this market, extending it beyond belief, is the entire AI trade. Now, we've got a problem here. Alibaba Cloud now this morning came out claiming to slash nVDA GPU use by 82% by using a new method. It's called a pooling system. So if they can slash 82%, that, by my math, is quite a bit of profit. So with this going to nVIDIA directly, they're saying they face unprecedented margin risk as big tech customers are beginning to build their own AI in-house chips. So they made their product so massively expensive, pulling in a lot of profits, that they drove the innovation for these other companies and China, other countries as well, to innovate and look for their own solutions. And so they did. We've got Broadcom set to skyrocket because they now have an open AI accelerator deal. So these smaller companies now making direct deals, and nVIDIA is at risk here. So we had also this another side to it. Beth Kindig is a tech analyst, and she's saying that NVIDIA's real bottleneck isn't the chips, but the power that they utilize. And she could be very well correct. I've been speaking about the issues that the power companies and backups for these are going to face in the near future. So, along with this, we've got 5G and the advancement of the wireless. And I just want to plant this here, literally plant, something strange happening to trees near cell towers, and scientists want to know why. We got a bit of die off going. So, not healthy wavelengths, and I'll just leave that there. Now, as I had said before, Japan now they are going to be leading the cryptocurrency shift and also the shift to stable coins. Now, the banks are talking about the stable coins, which are CBDCs, and the smart citizens are going to go outside of this and use actual cryptocurrencies that are hopefully decentralized. So, Japan considering to allow banks to trade digital assets such as Bitcoin. So, they're also trading with their stocks and they want to expand because they're in a dire bit of straits. Now, this is the new incoming prime minister. She's the first, they're making a big deal, first woman in this position, but she's kind of being set up. Can she become the icon for the next global depression? Is it possible? Because that could spark, if Japan goes a little farther off, it could spark global issues, if you will. They've got a lot of debt. Yen carry trade still going on. In fact, at this point in time, it is now increasing as more money is going after that with the higher yields. So I want to talk a little bit more about what's going on in the EU as well as in the UK. They now have a chat control law and they are allowed to scan all private chats. And if you're saying something that they don't agree with, they can take action. So we are rapidly shifting into this kind of dystopia that we've been speaking about for some time. So we've really kind of got to be aware of this and be ahead of it. So amidst all of this saying that our economy is just fine and the consumer is still spending, we've got a spike in job searches for the holiday season for more part time jobs. So, if consumers were truly doing that well, they would not be searching for part time jobs during the holidays in the United States in order just to make ends meet. Because we've got a dichotomy, and this is what it was designed. The middle class is getting squashed out. So, we've got a two-tier society, and the lower tier owns debt. The upper class own assets. So you're gonna have to move towards one or the other. There will be no middle class. So please make sure you own real assets and not debt if you can get out of debt. So with all of this, I wish you all a wonderful trading day. And until I see you again, my friends, resist.